Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 6th of December. Right, another Friday. Well, I'll tell you what, the Omicron virus has really sort of got the market rattled at the moment. The US equity markets got belted again. Bit of a risk-off situation. We saw the euro, sterling, Aussie, Kiwi fly to the downside. The dollar, well, it's not exactly shooting up because you had those weaker sort of variables in the non-farm payrolls. If I can just scroll that up a touch. And as I said, the plan is already laid out. So this just stalls a bit of dollar momentum at the moment. They're really weak or weaker non-farm payrolls data. The unemployment rate was very good. Average earnings, well, slightly off, but that you combine the non-farm payrolls with the various news around the Omicron virus, right? And then you start to get a bit of a mixed market. So what that's creating, that equity market or negative equity market is creating a clear risk-off situation. So if I just show you the charts, you get a better idea of what I'm talking about. Now the risk pairs, Aussie, Kiwi, CAD, right? That's they're the three sort of commodity risk currencies as such. They all sort of bled to the downside. But I tell you what, this is one of the things. I mean, people who chase the non-farm payrolls, you're asking for trouble. The sort of weaker response on the numbers saw a lot of these currencies spike upwards, right? Bit of short-term dollar weakness as they sort of mulled over the rest of the numbers, which were pretty good. And then it sort of drifts lower from there. So trading those non-farm payrolls is never easy. But this number here, as I was saying, it's a bit better because the plan is already laid out for the US and the question mark is over the Omicron virus. So a little bit surprised euro hasn't really moved too much. I thought it would be well under 112, the figure. If anything, it looks like the one pair out of the dollar block probably to get onto, right? It looks like it's ready to sort of move down and follow sterling down, Aussie down, Kiwi down, and the CAD down, which is the dollar up, right? The other thing is just to note, as we come into the start of this week, right, just looking at dollar Swiss, that's probably not the best color to be doing that with, dollar Swiss and dollar yen, right? So we had that correction, the risk on situation come into play when the Omicron thing sort of became apparent. Now it's sort of trading sideways and sort of whipping about all over the place, but where the market is not convinced one way or the other just yet, whether this is going to be a long-term thing or not. Of course, it's only been out a week or two. I mean, sort of apparently in the around the world for about 3 weeks before the WHO let everyone know. So that situation is still a big question mark, right? Outside of that, so at the moment, we've got a bit of a question mark over the Omicron. We're getting oil falling, and with the risk on profile, with the equity markets getting hit, the Aussie and Kiwi are the natural pairs to go to the downside. I think euro catches up, but that's what we've got. We've got a market not totally convinced or sure about what the hell is going on, if this Omicron is a real threat or not. And we won't have hugely specific direction until we get more information around that, right? So just at the moment, the start of the week, we're seeing a bit of a correction from those really weak close of the equity markets on Friday in North America. That's, giving the Aussie, Kiwi, Euro a little bit of a reprieve at the moment, right? So I would expect that to probably turn around as we come back into the North American session, European North American sessions, and we start to wait and see what's going on. Now, don't forget, we've already been through a lot of this, right? The way the media handles this. So you can be sure as hell the media will start the week with a bit of a splatter of all the risks involved, and it's getting worse, all this stuff. Don't forget, they've got a different agenda. They're trying to sell marketing, media, ads, all sorts of things, right? And then, so we're trying to work out, do we buy dollars or sell dollars, right? Because we leading up to this, well, before this, we did have a nice US dollar trend. At the moment, that's a little bit haphazard because of the variance that we're seeing, and the news is going to be random. Now, the only thing you can do is prepare your charts, get all your technical trend lines up so you know where those pressure points are, and then start having a flick down here through this schedule. You got the RBA Tuesday. There'll be a couple of key releases that you can really sort of focus in on, looking for sort of short to medium term sort of trading opportunities, probably short term with the Omicron in play. The zoo data, once again, another good number. I like to look at that. It's all I want to see is weak European news and try and get into that euro move before it sort of takes off to the downside. That's all I can see at the moment. You get the CAD Ivy PMI. We've got the Bank of Canada rate decision there as well, right? I think they will make decisions around what's happening. They'll probably mention the Omicron, but they've got other fish to fry. And as you scroll down through the week, UK GDP estimates, manufacturing output, etc. Decent numbers for the UK. Like they're really directional, but sterling's not exactly. It's sort of caught up with, the pandemic, residual hangover, lack of economic growth, all sorts of things. And the central bank's talking about raising rates. Anyway, it's a bit of a mess. If anything, it's disappointing that this has all come up because we've got US CPI numbers, to me, probably the key number for the week. And we're going to have a whole heap of rubbish that we're going to look, geopolitical rubbish that we're going to look around and sort of check over our shoulder to see what's what. So we'll see how that plays out. But there's plenty going on the peripheral. We just want to see when these economic numbers come out, if the market is quite static but responsive, then we can still get in there and sort of take 30, 40 points, 50 points out of the trades when they happen, right? Probably the Asian session may be a chance because it's, that's when all the news from the North American session goes down and where the markets are at will to move with what's coming out. But anyway, have a look through the calendar. It's a little bit, there's sort of bits and pieces each day, if anything. The ISM non-manufacturing numbers Friday, okay, a little bit better for that. And then you're just coming down, trying to piece together what opportunities match up with which pairs, focus on the pairs with very clear direction. I think the euro is a sleeping giant at the moment. I still like the downside. And sterling, Aussie, Kiwi is just drifting to the downside. Dollar CAD, wants to go up, and that's because oil's falling mainly, right? The Swiss and yen, they are waiting for a geopolitical update to work out whether they go up or down or not. And the dollar index overall is just cruising to the top side. All right, guys, that's it for me. A bit of an interesting one. And with the equity markets getting belted like they have been, it's probably a good idea to check your equity charts, okay? Your Dow Jones, your S&P 500, the NASDAQ. Check out what's going on there because they trade technically just the same as the currencies and well worth a look. All right, guys, have a good one. All the best. Cheerio.